Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming right here from Ticket Tacker. Let's take a look at the gold market here, trading last at 1855.90. We've had a pretty volatile morning so far, as you can see earlier in the evening here, early morning. The gold market experienced a sell-off, activating this a short trigger that was pretty much in the cards here on the daily sell-to level of 1852, and also the sell-1 level, as well as the monthly average price of 1864 has been completed. We've had a reversion unfold right from the 1832 buy one level that was anticipated here overnight. And we've accomplished now from 1832 to 1864 the trading range. So we pretty much have completed the overnight patterns. I recommended on my video yesterday to stay long, and these are the levels that we use to lock in profits, to pretty much lock in the balances, you might say, of the inventory that we carry. Pretty volatile day today as we enter into a new administration. The markets, even in the stock market, is fairly positive, about 26 points, but it is in an area of distribution of supply. So the path of least resistance, if you're entering into the market here, is to for a mini to look to see if we get short triggers activated. If we can get the market in gold to close above 1964, it's going to activate the 1900 levels. A little bit of profit taken, obviously, after making the highs. Silver at 25.61, up 30 cents. So we are trading definitely up here with some very strong buy-in unfolding here. And that's pretty much across the board. Derivatives, futures, stocks, nugget to the one derivative, huge on the upside at 238, up about 4%. Obviously, most of this stuff is in overbought territory, so it would not surprise me to see a bit of profit taken as we get up into this level here. That seems to be a breakout level. I would reserve the right to go short and wait actually for the market to provide buy-in opportunities here as it did early this morning. About 5:15 a.m., the market reverted, touched that 1832, making a low of 1831.10, and just completed the target of 1864.80. This is what I mean. This is a classic example of the reversion to the mean. Not only the market activated an extreme level below the mean on the daily level, completed the target immediately, but also activating a weekly uptrend momentum, putting into place the targets on the weekly of 1855 to 1864, which have been completed. The daily targets of 1846 to 1852 have been completed. So from a short-term trading, day trading or swing trading, obviously the pattern has been completed, and now we are allowing for the bigger picture to unfold, which is that basically it looks like the market, as of yesterday, made a key reversal day. As you can see, reverted right back up to close above the averages daily, weekly. And now it's testing the monthly average of 1864. If we can get above 1864, then we're looking at 1883 above, and all the way up to the 1900s here. Let's take a look at the monthly levels here that we have for this month, and also we can see where we are in relation to the annual as well as the 9-year cycle. You can see the low here of 1767, made November 30th, 2020, was the annual low for 2020. And from there, we have unfolded the first leg from 1767 to 1962.50, which coincided really with a monthly sell one target that you see here of 1950, and reverted from that level to test the lower levels of support. The market completed the target here from 1767 to 1962.50. That's almost a $200 move since November the 30th. And I keep saying this, ladies and gentlemen, to prepare for extreme volatility, because I don't believe that we have seen anything yet. We're going to be getting, I believe, $200 moves in gold within a day, and maybe more. The volatility models, the momentum models that we have, going back obviously to 9-year cycles, indicate the market has bottomed, come down. Yesterday tested the annual target of 1810. It tested the monthly average, the monthly buy one level of 1816, and reverted from there. And we're trading near now the 1864, which is the monthly target that upon closing above 1864, we're looking at 1950 right away. So I think we have $100 move coming up really fast. And if we can get through this 1950 level on a monthly, we can go all the way up to 1998. And pretty much, once we get through 1998, then we're looking at the 2000 handle relatively fast. The thing I'm trying to point out to you is that the momentum models that we use pretty much have broken any benchmark in terms of volatility. And what it is suggesting based upon the mathematical calculations that we use is that we should see an acceleration in price that could take us all the way up to 2150. We have a little bit of resistance here, 1864. Obviously, that's the now monthly average that we're running into. And right above it, we have the Fibonacci trendline resistance, which coincides exactly with the high today. And also the monthly average, as you see, of 1864. $58.70 last, $58.70 traded. What I would like to share with you here is a report that we published on the Associated Press and also for our private members here in Seeking Alpha on October the 4th regarding the annual targets and supply and demand levels for the 2021 season. Our calendar season is from September to September. And the 360-day cycle the market closed at 1836 on October the 4th. And it identified the 360-day cycle trend momentum to be at 1771, which came in bullish, obviously, because we're trading above the 360-day average price, or the momentum, sorry. The 360-day cycle, the VCPMI, which is the average price, was 1810. And we came in trading above that, therefore the market price momentum was bullish. It also identified that if it closes below 1810, it would negate this long-term bullishness to neutral. And it tells you also that if you're long, to take profits in the 2164 to 2442 area, which is expected during that period of the seasonal cycle from September to September. And we published very specific information, prospectively identifying where potentially the pivot points could unfold the direction of the market or clear the path, you might say, of the direction of the market. And so if we take a look at what's happened here, is that the market came down to test that 50% Fibonacci, basically that was in the level of about 1778, reverted from where it's supposed to, and it tested this high here on January the 6th of 1962.50, which coincided again with the monthly levels of resistance and distribution of supply, and obviously reverted right back down to this level here with a low of 1800, which came down through the monthly by one level of 1816 and also the 360-day average of 1810. Reverted exactly from there. The fact that it came down through the average activated a buy trend momentum, and automatically the targets above were activated. So we're looking at targets based upon the 360-day cycle activation in that 2148 level. 2164 to 2442. As we speak, the targets are being activated by the action of the market. We're trading through 1864. We're going to go into a fast market, ladies and gentlemen. Fast market conditions. Fast market to the upside. We have a massive move reversion occurring in silver and gold. Continue to maintain your long core position, as we've been suggesting here for the past few months, and to use these corrections that we get so you can add to your long-term core position. Like Nugget, like SILJ, GDX are in fast markets to the upside. The XAU, the gold and silver index, is fast market to the upside. If you're not in this market, my friends, you missed it. So let's continue to just watch this market here as it takes us into that target now of 1950 is the next target activated based on the monthly signals. We've gone through all of the targets daily and weekly, and now we are entering the monthly, which is predominantly bringing in the, as you can see, the wave patterns unfolding from bearish to bullish, from the daily to the weekly, and now to the monthly. And the big picture basically is extremely bullish. We have all of the three trends, the daily, weekly, and monthly trend, bullish, as well as the 9-year cycle supporting a bullish trend momentum. $18.83 is the next weekly sell-to level, the next target. As the price crosses the level, the pivot points here that we use, automatically the intelligence translates that into a bullish trend momentum. The momentum is unfolding above the average price, and it's bullish when it trades through the average price above, and it's bullish above and bearish below. It's the equilibrium. It's the balance, you might say, in this case, the monthly level that is the equilibrium in price. 1883 target activated. Next. A lot of buying coming in here, especially from below earlier. It was a tremendous opportunity to get on the long side at 1832. So what this has done is it has uncovered higher highs, or buyers now are willing to pay up, for getting into the gold market. And I think this shift that we see, that we are witnessing now, trading through above 1864, is extremely bullish. 67, 68 traded. We got a fast market to the upside here on this metals markets here this morning. And if you're not in it, second guessing it, or wondering if it's too late, or you missed it. You missed it. You want to buy the corrections in gold. You don't want to follow the herd. You don't want to follow when everybody's buying. That's when you're going to get slaughtered. Market showing a lot of strength underneath. Corrections are being taken. All the supply that was offered early this morning was taken, and then some. And the buyers now are stabbing into this area of 68, 69, and literally there's nothing except air all the way up to 1883. Testing 1 2. Testing 1 2. Hello, testing. Testing 1 2. Testing 1 2. I'm sorry, I'm having some difficulty here this morning, and I'm not sure if you guys can hear me okay. Okay. Sometimes unpredictability is sometimes the path that we get when we use technology here. Okay. I think we're back online again. 1766, 1866, 1967 traded. So we're still trading in this area. Fast market up. So it's very difficult to, if you're not in the market, to be looking to do anything, as the signals are indicating that we are in an area that is bullish, but it has met the targets short term, and now it's entering into a trend momentum. So if you are a momentum trader, and you want to take the risk, the momentum is unfolding here bullish with a target of 1883. I choose to take the highest probability trades in terms of my own trades and what I'm advising my traders and subscribers to do, in terms of how to follow this methodology that has proving to be very successful for me last year. And I'm showing you here how I'm applying the intelligence as is directed based upon the algorithm that was written in C++ in TradeStation. On the daily charts, we are trading well above the daily charts and even the weekly numbers. So the market is now entering an overbought condition. It's neutral on the daily. It's going neutral on the weekly, and now it's activating the monthly targets above. So it's bringing in and rolling over, you might say, the momentum from the short-term analysis to the intermediate to the longer-term analysis that we're looking at, in that basically all of the trends are getting bullish in the gold market. This is the Equity Management Academy mean reversion trading special weekly report for the gold market. With stimulus reach 10% of GDP during Biden's administration. Summary. We believe that gold is going to go much higher. The commodity markets are starting to explode. The lockdown globally and locally has destroyed the supply chain. We could be reaching 10% of GDP just on stimulus, which is 23 trillion or more. Fundamentals. We believe that gold is going to go much higher. It should adjust to the relative volatility of Bitcoin stocks and crude oil. The commodity markets are starting to explode. We have yet to see how fast. I want to share this podcast that I made yesterday. Economy. Soybeans are trading at around $14 from a low of $8 a bushel just a few months ago. These prices are yet to be reflected in retail prices. Government statistics do not include energy and food, which are considered short-term anomalies. However, these prices are not short-term anomalies. They are intermediate to longer-term problems. The lockdown globally and locally has destroyed the supply chain. We are using current inventory, and when those supplies are used up, then prices will rise rapidly. Real estate, which uses lumber and various metals and basic commodities, has seen an explosion in prices. Inventory is very low. So there is an anomaly between where prices are and the rising cost of the inputs. The US dollar continues to lose value as more stimulus is added to the economy, which leads to inflation. In the supermarket, products are being sold in smaller amounts for the same price, which is helping to hide inflation. We could be reaching 10% of GDP just on stimulus, which is 23 trillion or more. These are staggering numbers. We have to support Main Street and get the economy going. But the stimulus will lead to inflation. Now, we have vaccine issues in terms of who gets it, distribution, and availability. It is amazingly chaotic. Over the next few days, we're going to see what a banana republic looks like. We are seeing a lot of things that only used to happen in banana republics. Political unrest follows financial distress, which is what we are seeing now. We appear to be moving into extremes to the right and left as the economic system collapses. The key positive factor for the US is that the dollar is the world's reserve currency, so we can print as much currency as we want to. Others cannot do that. The percentage of reserves held in the US dollar has been in decline for decades, but it is still the world's major reserve currency. The system has benefited a handful of billionaires, but has hurt
Main Street, the middle class and the poor. We have the largest wealth disparities in U.S. history, and based on history, it cannot last. Change is coming. The pandemic took the veil off what was already a failed or weak system that was full of debt. Central bankers today do not have any room to manipulate interest rates anymore. With global record debt, they cannot raise interest rates. With a global lockdown, which has closed almost every sector of the economy, they cannot raise rates. Now, trillions of dollars in spending is talked as if it is almost nothing. The key is to look for ways to protect yourself. Gold and precious metals can be critical to retaining your lifestyle and supporting your family. Gold and precious metals have been valued for centuries. Fundamentally, gold and silver appear to be poised for a major move up as a risk and safe haven asset. Technically, both also appear ready for major moves. All major surprises are going to be on the low side. In March 2020, when gold collapsed to 1451, gold became a currency and the US dollar became a commodity. After making the high of 2089 in gold, it then fell down to 1767, and we are now at the beginning of what appears to be the second leg. As we move into the end of the month, if this price holds, it may be the seasonal low. We are looking from this low to a rally to at least 2000. Gold is becoming clear that around 1800 is the bottom of the gold market and is highly likely to revert back up. We are using this correction to add to our long positions. The gold market is trading last at 1834.30, up about 430. We made a low of 1800 last night. We use the variable changing price momentum indicator to analyze the markets. The VCPMI daily numbers showed that 1812 was the buy one level and buy two level was 1786. As of Friday, the market on Sunday night came down into 1800.8. It came right into this area of support or of supply, accumulation of supply. It then reverted quickly and closed above the weekly buy one of 1809 and the daily buy one level of 1812. It activated a strong signal with the targets of the daily and the weekly averages of 1826 and 1836. The market then met those targets. The VCPMI then went neutral at 1836. The market is reverting from what appears to be an area of demand. Gold is trading above the daily and weekly averages. The pattern is unfolding from a bearish to neutral to bullish pattern. Trading above the daily average of 1826 puts the target of 1851 into play for the day. Unless it closes below 1826, if you want to go long, these levels are excellent areas to enter the market from. You want to wait for the market to come down below the mean to buy or well above the mean to sell. The weekly with a target of 1855 is also coming into play. The daily and weekly signals have now been activated. Silver has also completed a pattern of the daily sell one target from the extreme below the mean of the buy one level of 24.29 to 25.47. That was a nice trading range on the glow base. Now we are at the upper end of the range and supply is starting to come in. Silver has gained about 35 cents. It's lagging to gold, but we expect silver to have incredible volatility compared to the gold. Gold and silver, given their incredible volatility, offer tremendous opportunity for traders. If you can tolerate and manage the risk, such as by using the VCPMI, you can trade these markets with great effect. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ema2trade.com, or listen to any of our previous episodes.
I wanted to share that information with you. I prepared that podcast yesterday, which is relative to what's happening here today, and I wanted to make sure that I share this information with you here as a courtesy. 69.30 up 29.10 last. We got a fast market conditions, ladies and gentlemen, and you don't want to stay in the way. This is a giant bull market awakening. 1883 is the target, and we're going to get there pretty fast. $69.20 up 29 here. $69.30 bid offered. I'm sorry. $68.90 traded here. A big day for the metals here this morning. 67.5 traded up 27.20. It's still holding the gains up here. The market holding above 1864, which is the monthly average, is a very good sign. It seems that all the other metals here have reversed as well. We got the platinum up, also palladium. It seems that we've had a major reversal on most precious metals here, which leads me to believe that this is a fundamental change that's taken place, not just an aberration or an anomaly. I believe that the markets, particularly the commodity markets, are in a transition, basically from a bear market for the past at least 10, 15 years for sure, to what appears to be a bull market awakening. And the kind of a market that we're going to be looking at here is going to be spectacular in terms of prices, volatility. What you saw on Bitcoin was just the beginning of volatility for the rest of the markets, and in particular for the commodity markets. The commodity markets have awakened into the long-term bull market as a consequence of the potential devaluation, the potential weakness that we have on the US dollar as a consequence of all of this money printing that needs to take place. Janet Yellen announced yesterday that they are pulling all stops in terms of printing money as much as it is necessary. And so this has ignited tremendous rallies in grains, in grains, in crude oil. We are beginning to see the commodity markets come alive once again. And pretty much, I believe what that is indicating here is that we are definitely moving into an inflationary spiral, an inflationary cycle that we have yet to see. How fast the velocity of money is going to come out and chase these goods here as we come back into this new normal economy that we're dealing with, which is subject to just logistical issues right now. The lockdowns continue to be imminent, and it doesn't appear that we are going to see anything happen, anything soon. So the damage continues to deepen in Main Street, and I think that we want to be prepared for massive amounts of quantitative easing, massive amounts of printing by our central banks. And I think that we pretty much are at the beginning of the next inflationary commodity cycle building up. These are historical times, ladies and gentlemen, and we are witnessing once again the beginning of what I believe is an accelerated inflation rate in the United States. Thank you for your time. Thank you for the opportunity to share this information with you. And until next time, my friends, be well, take care of yourself. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.